Hello everyone. This is the pre-market report video for today, 5th February 2024 for the Indian stock market in terms of Nifty and Bank Nifty. First, quickly let's see what happened on US market on last Friday. Before their market opening, Bureau of Labor Statistics released all the jobs related macro for the January month. However, we are going to see just 3 important ones such as average hourly pay increase compared to December month, then non-farm payroll addition and unemployment rate. First, hourly pay increase on monthly basis, very straightforward. Compared to December month, it increased 0.6% against the expectation of just 0.3% increase. So, pay increased double the time more than what market expected. And the same scenario on non-farm jobs data as well. Just for everyone benefits, non-farm jobs data means basically it measures the number of new additional people employed in the country in that particular month, excluding the farm industry. So for last month, for January month, the data came as 3,53,000 new jobs added against the analyst estimation of 1,87,000. Again, as I said, it's a similar scenario, almost double the number than what analysts expected. In addition, unemployment rate came as just 3.7%, which was also lower compared to 3.8% what market expected. So as a summary, this jobs data on Friday was the very good number, and obviously more new jobs accounts for the major economic activity and consumer spending. This very positive jobs data made the Fed interest rate monitoring tool to give chance that 80% probability that Fed is going to pause the interest rate in the March month FOMC meeting. Earlier, same tool 15 days ago estimated 80% chance that Fed will reduce 25 basis point interest rate in the March month, and now that is fading away. And thus the 10-year bond yield again increased to above 4% from around 3.85%. Similarly, dollar index increased from around 102 to near 104 range. So the global momentum is deteriorated. However, none of that was reflected in US market because of the earnings. On Friday pre-market itself, we discussed about the earnings of Facebook, Amazon and Apple and its impact on post-off-market trading. That on Friday in actual market, Facebook increased 20% share price and Amazon increased near 8%. Both these stocks made both S&P 500 and Nasdaq super positive, and Dow Jones wise Exxon and Chevron Oil, both biggest oil companies in US, released the earnings better than expected. And because of this, all three US major index closed super positive. In the end, Dow Jones up by 0.35%, S&P 500 increased by 1.07% and Nasdaq rallied 1.74%. And regarding US VIX, it's roughly same, just below 14. The reason I'm telling this is because US market closed significantly positive, but it doesn't mean for the global momentum. Also today, roughly in the morning around 6 to 6:30 AM Indian Standard Time, Fed chairman is going to deliver a speech on CBS News 60-minute show. Because it's around the same time as the pre-market video release time, it's not possible for me to listen, take notes and do impact analysis, but it got enough time for investors to understand his speech impact before the 9 o'clock market opening time. So recommend to keep an eye on that side as well. I think most probably he won't speak positively, especially after this good jobs data. Anyway, as I said, because of this good jobs data, global momentum was deteriorated. It was evident in GIFT Nifty as well. On Saturday early morning, GIFT Nifty closed at 21,935. Finally on Friday, the premium with respect to spot market increased to 120 points. Considering those, for now it's indicating the gap down opening of 30 to 50 points. About Indian ADR, in line with the Indian market on Friday, both IT companies closed positive of around 1%, whereas both banks closed significantly negative, in fact more negative than Indian market. So those were the things happened on global market on last weekend. Now let's discuss the Indian stock specific information. First, regarding the present bank's negativity, there is no concrete correlation, or at least I don't know. Please look at these 4 stocks closing on Friday. HDFC Bank and Axis Bank down over 1%, whereas there is no similar negativity around SBI or Kotak Mahindra Bank. And if we add more banks, the scenario is same, no trend. AU Small Finance Bank down over 1%, whereas ICICI Bank didn't. So there are some banks really negative and some banks don't. In fact, on Friday, PSU Bank as a sector, it increased over 2%. Whereas because of Axis Bank and HDFC Bank, private bank as a sector dropped 0.7%. There is no correlation and no concrete reason. However, I will tell what are all the things happened in the last 3 days. Honestly, I don't know what is influencing. Anyway, first of all, on Friday, all the selected banks started to fall after RBI issued the warning about KYC details, which was not corrected in Paytm Payment Bank. Like 50 number of people are using the same PAN ID, which was their reason for their compliance issue in Paytm, which will lead to the potential money laundering issue. Here, they just mentioned about Paytm. They haven't mentioned about any other banks. Only they issued the fine on Bajaj Finance. So again, this can be a potential. Another one on Friday, RBI said that they are going to conduct the VRR on coming Tuesday for 50,000 crore rupees. Here, we discussed this a lot of times. The purpose of the VRR is to support the banks which got credit crunch issue. In December month, RBI and all the banks together kind of said that around Jan this year time, they expect there won't be any credit liquidity issue since because of the improved government finance. But now February and RBI is issuing a press release for VRR, meaning still Indian banks got the credit issue, it's not gone. Again, here also same, no specific bank name, it's just general. Anyway, those were the two potential possible reasons. And during weekend, there were couple more new banks related info which might potentially impact the banks. Because now Paytm Bank is going to cease by February end, there is an ongoing decision either Jio Financial or HDFC Bank expect to acquire all the Paytm customers. For the moment, this is just a rumor, but any confirmation around this area will influence the stock price. Second, I don't know it's positive or negative. Both ICICI Bank and HDFC Bank purchased 7% each share on the company called RMBS Development. In simple words, what this new company does is, they pool the retail home loan portfolios and then banks will sell them as pass-through certificates. PTC. Just for info, PTC means it's just a financial instrument that transfers interest payments in favor of the certificate holder. Hope I'm not confusing. So this news will potentially influence both ICICI Bank and HDFC Bank. Moving on Saturday, SBI released their earnings. Net interest income and NPA all comes as good, better than expected. However, their profit dropped over 35% compared to last year due to the one-time pension payment. From the top line financial perspective, the result is not good, but during weekend, almost all the brokerages increased SBI target price. So looks like market took this as positive. Either way, SBI share price expect to react for this. Then for Reliance on Saturday, Indian government increased the windfall tax from 1,700 rupees per ton to 3,200 rupees per ton on the petroleum product. However, they haven't increased any on diesel and aviation fuel. So again, possibly Reliance might react for this. Finally, about institution, FII trade value becomes normal, and on last Friday, the net bought for marginal 70 crore rupees, whereas DI net bought for 2,460 crore rupees. As a summary, US market closed positive, but according to me, the global momentum has deteriorated. Banks, Indian ADR and GIFT Nifty all indicating the negative opening. And also, there are some major sector-wise impacting news in the weekend. So from macro perspective, most probably expects market to consolidate. Let's see. Moving on, as per stock open interest, City Union Bank, Bata India, MRF, L&T, Titan and HDFC Life got an increased open interest along with a negative close, indicates the short build-up. On the other hand, Alchem Lab, Cummins India, Torrent Pharma and Exide Industries got an increased open interest with a positive price close, indicating the long build-up. About the things to look out, Airtel, Ashok Leyland, Sun Pharma, Bajaj Electrical, Tata Chemical and Varun Beverages are some of the major companies' earnings results are scheduled released today. In macro terms, before our market opening, both Japan and China service payment data is due. Then at 10:30 a.m. India service PMI and at 2:30 p.m. Germany's and Europe's service PMI data, and in the night US service PMI data are some of the items we need to keep an eye out today. Coming to technical, On Friday, Nifty opened a gap up of 115 points higher and moved to 22,100, but immediately it saw significant profit booking, but still it managed to close positive of over 150 points. Thus, on the daily chart, it formed a small green candlestick pattern with a long upper shadow, indicating profit booking at higher levels. Then on the weekly chart also, Nifty increased 2.35% and formed a long bullish candlestick pattern with an upper shadow that resembled a double top formation, which is a bearish reversal pattern. Hence, for Nifty to move up, it has to go past 22,150, which is the key hurdle on the higher side. Below that level, Nifty might consolidate with support around 21,600 to 21,500 zone. A break below this zone, then the next support is at 21,300 again. Thus, confirmation of a bullish trend resumption would only occur with a decisive breakout above the double top, which is around 22,125 mark. If it breakouts above 22,150, then it's an upward momentum which potentially could push towards 22,500. In case of Bank Nifty, it also opened 380 points higher and moved above 46,800, but in the end it closed below 46,000. Thus, on the daily chart, it formed long bearish candlestick with minor upper and lower shadow. The zone 46,900 to 47,000 coincides with 61.82% Fibonacci retracement level of the previous entire fall between last December and Jan. Thus, Bank Nifty is likely to consolidate in 47,000 to 45,500 in the short term, or it has to break out decisively on the either side. Regarding options open interest, because of the rally, maximum call option open interest was at 23,000 strike, followed by 22,200 and 22,700, with meaningful new call option writing at 22,200 strike, then 22,100. Thus, from the options data also, it's indicating 22,100 to 22,200 will be the key hurdle. Whereas on the put side, the maximum open interest was at 21,000 strike, followed by 21,600 and 21,500, with new put option writing at 21,600 strike, then 21,000. Hence, the support is at 21,600 to 21,500. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.